Well, it's official. We have missed on data. And no, I don't mean missed as in the data came in low or high. I mean literally the reports, the wire reports that show us the data say there's no data. It literally says weekly jobless claims, quote, delayed by U.S. shutdown, blank for numbers. August factory orders, delayed by U.S. government shutdown, blank for survey, actual results, prior release, all blank. Tomorrow, we're going to get the non-farm payrolls from the same entity that releases weekly payroll claims, or we're supposed to. And based on this trend, we ain't going to get it because we don't actually expect that the government shutdown can end today because it's a Jewish holiday today. So you can't get a government shutdown to end today. Best case scenario, you're going to get yapping on both sides. And I hate to say it, but so far, the yapping doesn't exactly provide any confidence that we're getting closer to a deal, given that Mike Johnson is just having daily press releases talking about how horrible the Democrats are. You can see the byline there. Nothing to negotiate on with the stopgap bill. At least Donald Trump, though, is taking, the high road. But, oh, wait, USDA.gov. Due to the radical left Democrat shutdown, this government website will not be updated during the funding lapse. President Trump has made it clear he wants to keep the government open and support those who feed, fuel, and clothe the American people. Oh, okay. Well, maybe he's taking the high road on the HUD.gov website. Oh, geez, there's a pop-up. The radical left in Congress shut down the government. HUD will use available resources to help Americans. Okay, let me close the pop-up. Oh, the radical left in Congress shut down the government. HUD will use available resources to help Americans in need. Got it. Okay, well, at least things are getting better with Russia in the face of us not getting data and being in a government shutdown, right? Oh, U.S. to provide Ukraine with intelligence for missile strikes deep inside of Russia. There's a lot to put together here. A lot. And we also got Tesla deliveries, which smashed this morning. But we have to reconcile all of this, and it's going to take a minute. So let's try to break all of this down one step at a time. First things first. Even though the Bureau of Labor Statistics won't be providing labor data tomorrow, which is when the coupon code Daddy's Back expires for the Meet Kevin courses on building your wealth, that coupon will still expire. In that Alpha report this morning, we even talked about this yesterday, we talked about a buy the rumor, sell the news coming for Tesla. That's because even though Tesla smashed, you have to remember, traders buy the rumor, sell the news. And so expect a short-term dip on Tesla. Now let's talk about the actual fundamentals of this delivery number and how it sort of what it tells us about the consumer. Nothing about the consumer. It tells us that right now people are wanting to take advantage of a good deal. And the reality is, I myself am tempted to buy Tesla solar panels right now because there's a huge expiring coupon code. Now, we have expired a coupon code on Tesla vehicles. The $7,500 vehicle tax credit is gone. And understand, a tax credit is huge because tax credits are better than deductions in that they actually help you offset your taxes owed. So it's literally direct money that you can get. Now, without a $7,500 tax credit and Tesla buying down financing rates to 2.99%, they were buying them down to zero. On the Cybertruck, for example, you had 0% rates in Q3. So you had zero APR in Q3. You had $7,500 tax credits. These caddies are now behind us, which is in part why you're seeing some buy the rumor, sell the news. We knew this would come. This is understandable. But the same thing is happening in the energy sector, where energy tax credits, the 30% tax credit for residential solar, expires at the end of the year. So technically, you still got another quarter to go buy solar panels or home backup batteries, which frankly, I was running the numbers on. If your electricity bill is pretty high, where we're running our AI servers for HouseHack, our electricity bill is like $1,000 a month. It's a lot. And that's actually, like, for the servers we're running, actually decent because we're just not running that much other electricity. And so what's really interesting is if we put in solar panels with Tesla and, backup battery or two, we'd probably get like a 17% ROI by, reducing our bill 80%. Just kind of cool. So it makes sense why people are like wanting that 30% tax credit. Boost your ROI. That said, this is like short-term stimulus into a really weakening economy. ADP numbers that we got yesterday were absolutely terrible. Economists are missing so badly to the point where the numbers are just worse than even the economists' worst expectations. This is a sign that consumers are spending, but will it last? And that's the big question. As long as people have jobs, yeah, the spending will keep going, which is great. But what happens when those layoffs come? That's what everybody's worried about. This is old news. Challenger Job Cuts report is telling us something about the consumer that's very interesting. The Challenger Job Cuts report this morning, which is typically very volatile, shows you sort of we had a decline here in job cuts announced. Now, obviously, the White House is announcing that we're going to have thousands of layoffs at the federal government. But let's ignore the federal government for a moment. Where are we seeing job cuts announcements? Well, the big ones that are odd at this time of the market or this time of sort of the season, retail. Retail cut 86,000 jobs through September, up threefold from the 28,000 announced the same period of last year. And they made a note here. Now is typically the time when we see retailers bulk up for the holidays. But so far, plans have been slow to come, reflecting caution with low consumer confidence about tariff pressures ahead. This to me suggests that those with money, those exposed to assets, they keep spending money. But as we've seen for the last few years, that lower income individual in America is spending less, and it's leading business to say, maybe we don't want to hire as many people for this holiday season. You're seeing that in the Challenger Job Cuts numbers, and you're seeing that in the consumer confidence numbers. And at the same time, we're now playing monkey see, no evil, monkey hear, no evil with the actual data that's supposed to give us a green light for the Federal Reserve to know, are we soft landing or not? At the same time, this talk about Russia just increases escalation fears around potentially World War III, which people don't want to hear about. Now, you might not already know this, but the United States already provides a lot of CIA intelligence to Ukraine for targeting Russian positions. Basically, when the Russians advance, and even before the war began, the CIA is really good at that. Hey, there might be a weapons depot here. There might be a missile over here you could use. We're not going to push the big red button, but just saying. Ukraine eats this up, which makes sense. Look at our GDP relative to Ukraine. We are 1,000x the size of Ukraine. So, of course, we have intelligence. However, prior administrations, and especially the Biden administration, have generally rejected the idea of providing intelligence to strike within Ukraine or within Russia because it expands the potential of World War III. This is why Elon Musk cut Starlink service to the border of Ukraine and Russia, because Elon Musk doesn't want Ukraine using Starlink to guide drones deep into Russia. Well, this now changes with Donald Trump getting pissed, finally, at Putin. A lot of people in the Wall Street Journal commentary section and the little comments down below, they're actually like, yay, finally, Donald Trump is growing some balls and escalating the situation with Putin, suggesting that we might send Barracudas, which apparently Barracudas, we were studying this a little bit, they're 500 nautical mile range missiles that could carry 100 plus or minus pound bombs. These are pretty big, not as big as like the 500 pound bombs or 2,000 pound bombs that were a big issue for Israel bombing Gaza with. But 100 pound bombs, these are huge. 5 Gs of maneuverability. They can loiter for 120 minutes. Loitering, by the way, is this idea that bombs that you send can just hang out and circle. So like you launch them into an area, they just hang out and wait. So that way, multiple bombs can get into position at the same time and strike their targets at the same time. This is kind of like how Iranian scientists get taken out all at the same time. You lob bombs up into the air, and then you kind of have them all hit at the same time, so nobody has time to get into bomb shelters. It's crazy. But it definitely increases the risks of World War III. especially since the Kremlin is now, we're not just talking about tomahawks anymore. The Kremlin is saying if tomahawks are supplied by the U.S. to Ukraine, then it will mean a new serious round of tension. And Russia will have to give an adequate response. So Russia's already sort of front running this, saying, hey, we're going to have to respond if you actually help them strike deep inside of Russia, not only by giving tomahawks or barracudas, but by potentially, giving them the not only the weapons, but the intelligence to actually pull it off. So we're in a really crazy environment. At the same time, usually when the government shut down, it's a buy the dip opportunity. We all know that. It's almost always a buy the dip opportunity. The only way it wouldn't be a buy the dip opportunity is if we don't get a jobs recession. But now, because of the government shutdown, we don't have jobs debt. So it's kind of like, all right, so what do we do in the meantime? I kind of personally think you party until the government opens again. We got institutions woke up to a little bit of selling this morning. Usually when the market opens, this is the institutional reaction function, right? And so, we were talking about, hey, there's an opportunity for an uptrend trade here throughout the day. In the course member live stream this morning, which we do every day the market is open, we're like, there's an opportunity, this institutional sell-off stops, there's an opportunity for an uptrend trade. And remember, Tesla's buy the rumor, sell the news, partly because we're in a monkey see, no evil situation. We won't actually have government data until the government reopens, which means the longer the government stays shut down, the longer the rally can go. And it's like the opposite of what's happening on the ground with consumers, with, consumer spending in August holding up and the summer holding up, but the leading indicators, whether they're challenger job cuts reports with retail sales or confidence measures, suggesting a little bit of, hey, people might be running out of money going into the winter. This is where we get to a very interesting point. Markets are enthusiastic that the Federal Reserve is going to use ADP data to give us rate cuts. Markets are now pricing in about a 1.86 to 1.9 set of cuts for the year. This is a lot better than what we had yesterday. Before the ADP data, we weren't pricing in as many cuts. We were bobbing around, for a period of time, 1.5 cuts for the year, 1.7 cuts for the year. So really what you got is all of a sudden this boost of rate cut expectations. We're now guaranteeing a rate cut for October 29th. And we think there's over an 87% chance of a rate cut for December 10th. Markets are enthusiastic about that. We love the idea of rate cuts. It's bullish. But we didn't get really a good buy the dip opportunity from the job cut or the government shutdown, because you really have a market that's like, no bad data, no problem. This is a stage of euphoria. And so I want to reveal something. I briefly revealed this morning in the course member live stream, but I want to reveal something that I haven't revealed before because, well, I just did it. But I just paid off my home. And I think a lot of people who hear that, who know me, are like, what? When does Kevin pay off 30-year debt? Like, Kevin doesn't like paying off 30-year debt. But we're in an environment where I wake up every single day and I'm like, oh, damn. I've got millions of dollars in NVIDIA shares. And I look and I'm like, damn, up another 1.5%. And it's like every freaking day, 1.5% on a $4 trillion company. And I'm like, wow. I keep telling everybody in the course member live stream, I'm like, I promise you, I will sell this sucker so damn fast and I will pay the taxes on it soon. And I'm like, I will send an alert. You will get an iPhone alert. You'll get an Android alert. You'll get a, I don't know. You'll get alerts everywhere. We send the alerts at the course member live stream when I dump my NVIDIA shares. But it's coming. I will be dumping these. But the point is, like, I wake up every day, I'm like, this is insane. A $4 trillion company keeps giving me more and more money every day to the tune of tens to hundreds of thousands of dollars. And I'm like, this is crazy. And I think we are in a bit of an environment of euphoria where we're ignoring jobs data and trying to justify jobs data that's turning to SH90. Okay, it's really bad. The jobs data is really bad. We went from, listen, like, think about this for a moment. If you were just reading a textbook and somebody told you, hey, so average job gains in this economy are 150,000 per month, we'd be like, oh, okay, that sounds good. And then what if I told you, hey, average job gains fell from 150,000 per month down to 35,000 per month on a 4-month basis, 29,000 per month on a 3-month basis, and leading private payrolls reports suggest we're negative. You'd be like, well, according to the textbook, damn, you're going into a recession. That's what we would look at if we like zoomed out. But here we are waking up to our Nvidia shares daily. We're like, I'm making money. This is great. This is intoxicating. And we're like, but the job numbers are bad. And we're like, immigration's down. Trump's kicking out all the illegals. There's no recession. It's fine. It's a little bit like we're rationalizing why there's so much money being made, right? And so that makes me nervous. So while like I have these shares, I'm also like, you know what? If I pay off some 30-year debt, I can use those as a piggy bank. So I pay them off. It limits my euphoria, right? I'm not going to be on this like insane euphoria train. I'll take some, but I don't need to FOMO to the point where I'm in margin or I'm being unsafe. Because when a recession hits, it hits hard and fast often. And I want to be prepared to go, hey, yo, refinance everything when rates fall. I don't want to get stuck leveraging up to the tits when valuations are high and then, it hits the fan. And then I can't refinance because I'm upside down, right? Like, I don't want to be in a place like that. I'm not saying that would be upside down because that would imply, a larger drop in real estate prices, but I'd rather be conservative. Like, I look at this, I'm like, maybe like 24-year-old Kevin would have never paid off his home mortgage. Now I'm like an old man. I'm 33 now. I got 7 kids. My shorts are getting shorter by the minute. Like my shorts that I'm wearing, I don't have any shorts in the stock market. And yeah, I don't know. I love what's going on in the market, but then I'm also like, man, this ain't gonna last. This is literally like Warren Buffett's warning, what's the Warren Buffett warning? I think I wrote it down somewhere, but basically it's the it's like the last stage of grief or whatever in sort of like the euphoric cycle of the stock market. Where is it? I don't think I can find it. But anyway, Warren Buffett, he's got the Buffett indicator. The Buffett indicator, I think we're sitting at, probably the most insane. Oh, here it is. It was this guy. It was Leon Cooperman. Says we've reached the stage of the bull market that Warren Buffett warned about. He says, once a bull market gets underway, and once you reach the point where everybody has made money, no matter the system he or she followed, a crowd is attracted to the game that is responding, not to interest rates or profits, but simply because it seems to be a mistake to sit out on stocks. That is a banger right there. That is a freaking banger. But think about that. It basically says, because everybody's made money, everybody's willing to go monkey see no evil, monkey hear no evil on data, because everybody's making money on all their strategies. So, everybody's making money on whatever, Nvidia or Tesla or whatever. It doesn't matter that, now we're going to have to price in a substantial margin decline for Tesla vehicles, and will likely have the lowest sales deliveries ever in Q4 for Tesla vehicles. And Q1 will be even worse. Nobody cares about that because, again, once you've reached the point where everybody has made money, no matter the system he or she followed, the crowd is attracted to the game. We don't care about profits or fundamentals. We care about the fact that it feels like FOMO to miss out on stocks. I mean, look at the Buffett indicator chart. Buffett indicator chart. This is a good one. And yeah, here you go. So currentmarketvaluation.com did this. And this is where we sit. We sit at the highest point we have ever been historically. I love this, 69% higher than the long-term trend line. Damn. This is crazy. Again, I love it because I'm waking up every day to free money. But I'm also cautious because when the government opens up, we're going to get the jobs data. That jobs data hopefully says, don't worry, everything's fine, we've stabilized. But we have to be prepared for the real reality that the reason Donald Trump wants to keep this government shut down is not only to go fire a bunch of people in the government so Mr. Vogt can do his Heritage Foundation Project 2025 job. Is basically Project 2025 payroll. But Donald Trump also gets to hide the jobs data for longer, which is basically exactly what he wants. It keeps the euphoria going, which is fine. But I can't help but feel we're on a level of fugazi. So again, if you're in the Meet Kevin membership, you'll know when I dump in video. In the meantime, what we're doing is we're looking at stocks that there are two stocks that we've been looking at fundamentally that have recent uptrends that are fundamentally dirt cheap, technical support, fundamental support, and near-term catalysts that we think are really great plays. And they're not on my top 10 stocks to buy. So I have a list that's like top 10 stocks to buy. We're on 5 out of 10 of those. So we got 5 more coming. But these two plays are like, trades for the next 6 to 12 months. And they're juiced. So make sure you're part of, use that coupon code expiring tomorrow, Daddy's back. Remember, you get all the trade alerts, you get all of the memberships, you get lifetime access, you get all 8 courses, a lot of new lectures coming out. People say it could be tax deductible. You pay once, you get stocks, you get real estate investing, you get sales, you get do-yourself property management and rental renovations. New lectures coming out for this as well, because we've changed some of the colors that we're now using with House Hack, so you'll get insight into those. Social media, productivity, Trumponomics, the wealth plan library. It's pretty good. Let's check that out over at meetkevin.com.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.